Hello, everyone, and welcome back to the channel. This is Fair Value Finder, and today we are starting a new series called Head to Head, where we're going to take two companies from the same sector, compare their numbers, and see which one is the better company. We're starting this off with Realty Income versus VICI Properties. So these are both REITs, and they pay out decent dividends. So we'll see how everything shapes up between the two of them. I have the numbers from 2022, since that was our last full year of numbers, where they're extracted straight from what we looked at in the videos. And then we also have the growth rate for these over the last 5 years, their compound annual growth rates, to see someone might be losing, but they might be growing faster, catching up. So let's dig right into this. On revenue, our winner is Realty Income, coming in at 3.3 compared to the 2.6 for VICI. VICI is growing much faster, 12% faster on their compounding growth. So hopefully they'll be catching up here soon. But for now, O wins, VICI gets most improved. Cost of goods sold, VICI wins, and theirs has been growing very quick. So for this, it'd be one where we'd be looking for a slower growth, and Realty Income wins. So a lot of these numbers at the start go back and forth. For gross profit, Realty Income wins, but VICI is most improved. Gross profit, VICI wins, with Realty Income most improved. Both of them have a decline year over year on that number. Expenses, VICI wins, and Realty Income is the most improved with slower growth in those expenses. Expenses as a portion of revenue, VICI wins, but Realty Income is more improved. Net profit, VICI wins, and VICI has been growing it faster. So this is the first straight win for VICI. Net profit percentage, VICI wins, but there's a shrinking faster than Realty Income's. So Realty Income wins there. EBIT, VICI wins. This is surprising because VICI has a revenue that is honestly quite a bit lower. It's probably in the realm of 20% lower than Realty Income's, but they're winning on the net and the EBIT. So they have much better margins. So across the finances, VICI is definitely the winner here. Earnings per share, Realty Income is coming in higher, but for earnings yield, VICI wins. VICI is Realty Income is most improved on earnings per share, and they're both flat on the earnings yield. So for most improved on financials, Realty Income is definitely putting up better numbers more recently, but in total, VICI, with those margins that they have, much better. For this portion, the share count, I was surprised that VICI has more shares than Realty Income does. And VICI is actually growing their share count faster as well. So Realty Income takes a sweep on this. Shareholders' equity, Realty Income wins, and they are growing their shareholder equity faster, so they win on that. Free cash flow, Realty Income wins. VICI is growing theirs faster. We'll see when they're able to catch up. Free cash flow yield, of course, Realty Income wins, and they have been growing that faster. VICI has actually been on the decline on that, but they do seem to have been doing a lot of acquisition type things recently. But that was a clean sweep for Realty Income on that portion of the valuation. And they are also one of the more improved on that front. Assets, Realty Income wins, and VICI is more improved. Tangible assets, VICI wins and is more improved. Liabilities, Realty Income wins, and VICI has been growing that faster. For the tangible book value, VICI is the winner, growing that faster. Debt to equity, VICI has a little bit less debt to equity, but theirs has been growing while Realty Income's has been shrinking. So at that pace, Realty Income will become the winner here soon as well. Book value per share, Realty Income is the winner. VICI is improving. Cash on hand, Realty Income wins. They've been growing their cash while VICI has been shrinking theirs. Cash per share, Realty Income wins and has been growing theirs faster. Again, while VICI's been shrinking. Dividend, Realty Income wins. They both have the same yield, but Realty Income's yield has been growing faster. So that would be a combination of raising their payout and also a declining share price because they have had a bit of a decline more recently. The actual share price, we can't really judge a winner on that. Realty Income is about twice the share price of VICI. ROE, VICI is the winner here. For the PE ratio, VICI is the winner. And if we want to take a look at the number of properties, Realty Income is likely the winner. The diversification of their real estate portfolio, Realty Income is likely the winner. So it depends on what an investor is looking for. If they want a well-diversified real estate portfolio that has a pretty consistent track record, Realty Income is probably going to be the choice. And if you want something that's more geared towards entertainment and something that's going to probably have some better growth, VICI would be the choice there. So, looking at everything, VICI's got better financials. The balance sheet, they're honestly better on that as well, and they're improving. And then when we come down to the dividend across the board, they're basically the same. This dividend yield number, there's a few factors that go into it, so it's not as important as some of the others. The fact that VICI's been growing their dividend faster and their ROE is higher, I'm definitely leaning towards VICI as the better quality company here. So that's it for the head-to-head. Our winner here is VICI. They definitely have better financials, better margins, better return on equity. They have more tangible assets, lower liabilities, and the share count being higher and growing faster is one thing that surprises me. That would be my one concern here. But that's all for this one. Let me know what the next head-to-head you guys want to see is. I'm thinking of Pepsi versus Coke and Pfizer versus Merck are two that come to mind pretty quickly. So if you guys enjoy this, I'll get working on those and subscribe so that you can stay up to date and see them when they come out. Catch you guys next time.